So we have a huge shakeup in the top 10 retail stocks that were bought by us, the little guys, and it would appear that maybe some old bad habits are picking up once again, unfortunately. So let's discuss the good and the bad from a long-term buy and hold investor's perspective. But before we do that, make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. And just real quick, I know we got to get into this video here, but the earnings flash sale is ending this weekend for my group. So make sure you check out the pinned comment down there and see if a membership's right for you. We'll give you all the details there at the end, but I wanted to make sure I threw it in there this time because it is ending this weekend and I don't want you guys to miss out, those of you guys that are considering joining. Now remember guys, these are not my stock picks. These are not my top 10 retail stocks or anything else of that nature at all. This is an aggregate put together showing the top 10 stocks that retail investors bought last month. So this is what we were buying as a whole, not Luke's picks for the top 10 stocks or anything else of that nature. Obviously, you guys know my list would look very different from this list right here. So, just before we even get started, before you go down there and comment that, hey, Luke, this is terrible. Why would you have these in your top 10? It's not my list, guys. I apologize in advance for the list, but I can't make it up. All I can do is just give it to you guys and then give you my opinion. Now, also keep in mind, I am viewing this from a long-term buy and hold investor's perspective, and that's it. I cannot speak to if there's a trade here, there's a trade there. Is the setup good technical wise for a trade or for a fall? I'm not talking about any of that either because I'm not a trader. I'm a long-term buy and hold investor, and that's exactly what I'm looking at this from. Are these great long-term buy and hold stocks or not? Where are they at in regards to valuation and a lot of other things of that nature? That's the way I'm viewing it. That's kind of the lens that I'm looking at through. So obviously if there's a trade there, let me know down below. Obviously, because I'm not in that community. I don't pay any attention to what the trades are or what the technicals are doing or anything else of that nature because I'm not a trader. That is not my priority, especially when we're in the midst of earnings season like we are right now. So let me know if there is a trade, but just keep in mind, I don't care if there's a trade or not. That's not the lens that I'm viewing it from specifically. All right, so on to number 10. And that is Palantir. Now, I got really excited last time. For the first time on this list, Palantir debuted, and they debuted at number 7. It was great. I'm like, yes, we're finally figuring it out. We finally got some stocks on here. Some of the trash had kind of fallen off. And I'm like, hey, this is awesome. We're back. We're finally getting some great stocks into that top 10 list. Yes, we're buying it at what I feel was a high valuation, but that's okay. At least we're putting good stocks in this list. Unfortunately, it fell all the way to 10 and almost off the list this time. And I don't think that was because of the earnings and the pop-up we got after earnings, because that happened after February 1st. So this list is for January. So, obviously we were already not buying the stock as much as we were other stocks for the month of January before we ever had this big pop. As a matter of fact, Palantir was actually dipping a little bit coming into earnings there. And then, of course, we got this giant pop-up afterwards. So hopefully that's not a sign that we're starting to let bad habits creep back in again. But there's some other stocks on this list that moved up the list, unfortunately, that kind of indicate, crap, maybe some of our bad habits are coming up again. Now, in regards to Palantir, I have it as a clear caution because of valuation concerns, not caution from the standpoint of long-term. It's a great stock. Absolutely, 100% agree there. We'll talk more about valuation and some other things like that. I got a video coming on Sunday about that, so make sure you're paying attention. Make sure you're subscribed and all that good stuff. So that way you get notified as soon as that video drops there. We'll talk about that specifically in that video. But for me, it's definitely a caution right now, just given how much it's run up. Not a caution from I want to own it long term. Of course I do. I guess that's kind of a pump it with a little bit of a caution in regards to valuation. So stock number 9 is Disney. Now you guys know my thoughts on Disney. I don't know how it still stays on this list actually, because it just doesn't really seem to be a stock that would really fit with what us as retail want, but we continue to buy it anyways. It is still a clear turnaround play. They still have a long way to go. I own some shares. I bought some shares in the low 70s or mid 70, upper 70s, excuse me. Not a big position by any means or anything else like that, but they have business problems. They have a lot of things they've got to solve there. And so you've got to understand that if you own this stock, you have to understand that dynamic and understand it's a, legacy type company. This isn't a high growth stock or anything else like that. So you're not going to get those sort of returns either, which kind of makes it kind of odd that it's definitely a stock we want to lean into here as retail. So for me, it's kind of a caution stock, cautiously pump it there because there is a lot of risk with the stock. And you got to understand that risk more importantly, because they may not turn it around. And if you're paying higher prices like we are right now for it versus maybe owning it in the 50s, 60s, 70s, wherever, obviously you're taking on a lot more risk at that stage. So understand that dynamic, listen to those earnings calls, understand what they're trying to do to turn around the business, and then make a decision from there on this stock. So stock number 8 is Meta. Now, why, 2 or 3 other stocks are always ahead of Meta on this list and have been for a long time. Just blows my mind. There is virtually not too many stocks in the stock market that I feel like can just print money well into the future no matter what they choose to do, like Meta. It is just an incredible company. It is a cash flow beast. I agree, I don't like Zuckerberg. I didn't like him last year. I didn't like him 5 years ago. I didn't like him 10 years ago. However, as a CEO of running this business and in terms of producing me returns as an investor, I absolutely love the guy in regards to that because he delivers all the time for his shareholders. He has a vision for the future. He clearly knows how to transition the business multiple times, and they still have tons of different monetization levers to pull that they're still not pulling yet, but yet it still continues to print cash all the time. I can't believe we got it down in the $80 range. Just an amazing time frame there. Obviously, we're up almost 10x now from that level in a very short period of time in a great company. It's not like we were buying this and it was a, small stock, kind of came out of nowhere. No, this was already a mega cap stock. And then you got an incredible deal, an incredible discount on it. So for me, it's absolutely a pump it. I don't see anything that's going to slow Meta down in the future outside of maybe getting overvalued at some point in time in the future because a lot of folks get behind it. It finally starts to run. So of course, I love seeing it on the list. I just don't understand why we're buying other stocks that just don't have nearly as easy money potential per se as this stock does. But hey, again, I can't argue with the list. It is what it is. For me, Meta's absolutely a pump it. And speaking of all that, number 7 is GameStop. I don't know what to tell you guys. It looked like it was going to fall off the list like AMC was last time. And then here it is. It marched right back up ahead of 2 or 3 other stocks that are clearly better stocks. I think better short-term and better long-term than GameStop is. But hey, I don't know what's going on with this. Again, maybe there's another super mega gamma, ultra whatever squeeze about to happen. I don't know, guys. I can't keep up with all the different names. It's supposedly been happening here for, 4 years plus now. Okay, cool. But from a long-term buy and hold investor's perspective, I have no clue why we're buying this. There's literally nothing about this business model that tells me it should be ahead of Meta or really any other stock on this list. But it is what it is. We've got to live with it. That's one that we're picked. For me, it's an absolute dump it, has been a dump it. I don't know what else to say other than that. Number 6 is Microsoft. All right, so we're back to great companies again here. Microsoft is another great company. They're obviously at the forefront of a lot of different things. I'm obviously much more of an Apple user than I am a Microsoft user, so I'm kind of biased that way. But in regards to the stock, it's a great stock. It's a pump it. I don't think there's anybody who thinks Microsoft's going to be smaller over the next 5 years versus what, it is today. So there's no doubt in my mind, Microsoft not only is here to stay, they're at the forefront of everything that's going on right now in the tech world. And remember, it's not going to be this one winner type thing. There's going to be multiple winners. And I see no reason why Microsoft can't be one of those winners in that future as it continues to rapidly change. So we're doing right there with that one right there with Microsoft. Obviously, it is trading a little bit rich right now. I'm not going to argue that at all. But nonetheless, it's still a pump it for me. Great stock. At number 5 is Ford. And we're right back here again with a stock like Ford that just we hang on to as retail. Somebody please explain it to me down in the comment section. I don't understand. There was probably 3 or 4 months ago, maybe 6 months ago or so now. Time kind of flies. Somebody was telling me there was some sort of a situation where there was a trade that was on where it may have made some sense as to why retail was all over this stock. But I don't get why we want this. There's nothing in the earnings. There's nothing in the financials that tells me this is anything but, I don't know what to call it, not a very good stock compared to all the other stocks that we could own out there in regards to us as retail investors to not just beat the market, but dominate the market. But yet we continue to buy stocks like Ford. I don't know, guys. Total dump it for me. I don't know what we're looking at there. Again, somebody please explain it to me down in the comments. That would be great. I'd love to understand the why, because maybe that would open my eyes to something different there. But all I can do is just simply look at the financials, look at the earnings, and just kind of go, why? Why are we doing that over a stock like Meta, for example, or Palantir, for example? I don't know. I don't get it, guys. Please help me out. Number 4 is Amazon. Look, we've been talking about this one for a long time too on this channel, and it's been a pump it. Buy this stock. There's no doubt in my mind it's an incredible company. I know it's trading at all-time highs right now. The valuation actually isn't terrible on the stock itself, but it is a great stock, a great company. They continue to dominate in virtually every single segment that they go into, and they continue to put money back into the business as well. There's nothing like it, and it's going to continue to dominate, I believe, over the next 3 years, over the next 5 years. So absolutely, anytime this stock dips down, I put it on back on my DCA list. I just buy the stock because it's an incredible company and I just want as many shares as possible as I can get my hands on. So Amazon, definitely a pump it for me. Great company. Great job, guys out there getting this one up in the top 5. So stock number 3 is Apple. Now, you guys know it's my favorite stock of all time, but I got to give caution. I have to be honest with you guys. The valuation is stretched and the numbers aren't there to keep this valuation this high. Now, what Wall Street chooses to do, who freaking knows? Right now, it feels like Apple is almost like the ultimate safety stock. Like they're going there to keep the money safe. Big institutional money is going there and not leaving the stock at all, not putting that downward pressure on their stock like probably should happen, given that I don't think the earnings were terrible by any stretch, but we're definitely seeing growth significantly slow. And you're definitely seeing that that multiple is more closer to a multiple of when Apple's growing. And right now we're not growing. So that multiple should come down in regards to what Wall Street should be willing to give to a stock like Apple. But that right there is where we always talk about you want institutional holders holding your stock, because this is what happens when you have institutional holders holding your stock. You end up in a scenario where, hey, you're overvalued. Your earnings aren't really showing any sort of growth here in the short term, which is, of course, what Wall Street cares about, right? Really over the next year, they're not really showing a ton of growth, but yet the stock price stays kind of, locked in at a high valuation. You're not seeing 20, 30, 40 point, swings in Apple like you are a stock like Tesla, for example. That's what we talk about all the time here. Obviously, we all believe when Tesla gets the growth going again, it's going to grow a lot faster, but it's also going to stay a lot more volatile because they don't have the institutional ownership like Apple does. They don't have folks leaning on Apple for safety, which means less volatility, which means at a time when your stock probably should be getting pounded, it's not going to get pounded like others do, because those institutional holders are key to not just getting to that $1 trillion mark. That, you can get away with not having a ton of institutional ownership to there. But you want those $3 trillion, $5 trillion valuations, and you want to be able to hang on to them. You need that institutional ownership there. And clearly Apple has that in spades. That's why it stays high. So for me, you got to be cautious with it because of valuation, but I don't know. It's a great company. I don't think people are going to leave the, Apple ecosystem in droves or anything else crazy like that, especially given their size. At some point in time, that growth engine will kick back in again. And in the meantime, I love the stock, so I'm going to continue to hold my shares. So it's a pump it, but you got to be cautious because of that valuation. So stock number 2 is NVIDIA. Hey, I can't argue with this one. It's been the best stock in the stock market, probably the past 2-3 years now. No doubt about it. Absolutely a growth beast. We talked about it many, many times. I don't see things slowing anytime soon in terms of demand for what they do. I understand everybody freaked out about DeepSeek and all that other sort of stuff. I obviously, right there in my group, as soon as it happened, I put out a post basically saying, hey, this is all speculation, guys. This is a big nothing burger in the end. Sure, it exposes some things, but if you really thought about LLMs and how they all worked and everything else, shouldn't be that surprising to you that something like this came along. But more importantly, there's more to AI than just that. And the demand for the NVIDIA chips is going to continue well into the future there. So for right now, of course, somebody may very well catch up at some point in time, but for right now, hey, it's a growth beast. They continue to perform on earnings, which is the most important thing in regards to all this sort of stuff. So it's absolutely a pump it for me. I don't think it's trading at crazy valuations right now, but great company. I can't argue with it at all. Great job by you guys out there buying up this stock. And number 1 is Tesla. Well, you guys knew it didn't fall in the top 10, so you knew this stock had to be Tesla there. And again, it remains the most divisive stock in the stock market. It remains the stock with the most absolutely ridiculous bullish narratives and bearish narratives. I mean, both extremes are just so utterly ridiculous. It just distorts reality with the stock at every turn, in my opinion, of course. So for me, Tesla has been a pump it. It's been a pump it for the entirety of this time. However, I've had concerns with valuations in the past, and right now, until we get that forward guidance, because we did not get guidance on this next call, I can't really judge how overvalued we are at all because we don't have any guidance to go off of with that. So can't really give you a take on valuation right now until we get that guidance. I'd say it's a pump it, but with some caution right now because we don't have a clue as to what we're going to see in regards to numbers over the next year. At least we haven't received those projections from Tesla. And no, I'm sorry, I know there's people trying to argue that they did guide. They did guide. They said this is going to be $10 trillion one day. That's not guidance, guys. I'm sorry. That's just talk. It's all that is there. That speculation is what it is. That's not actual formal guidance on an earnings call for us to be able to make accurate projections out, which I think we may get that after they announce the new model that's coming there, and they may give us the projections then for that model at that stage. So they may be waiting for that. That's kind of what I'm hoping for, but I can't really judge valuation until then. So for me, it's a pump it, but I got to pump it with caution. If you want to see my complete watch list with price targets, you want to learn exactly how to do valuations so that way you don't find yourself buying high and then selling low, which is unfortunately what a lot of retail investors do. You want to see all my buy and sell alerts in real time. You want to go through earnings calls with me. You want to be a part of the best 6, 7, and 8-figure Discord out there. Get your free coaching, take free courses. Make sure you check out the pinned comment and see if a membership's right for you. Because the earnings flash sale is live and it ends shortly for my group. So make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.